this Intel miss comes on the heels of a couple quarters where they had surprised to the upside, but it makes you wonder about inventories, and especially with the economy overall looking pretty strong. I imagine this is going to raise a lot of questions.
Yeah, and there were whispers for those who try to track those things of a beat of about 51 cents. So for the current quarter, I mean, pretty much came in line. But even if you look at the revenue outperformance in the past quarter, about $300 billion, it doesn't make up for that shortfall in first quarter revenue guidance. So that does show you that just the lumpy pacing of the business. We'll see what they say about exactly where that's coming from. But a 6% move was indicated by the options in Intel, and looks like we got just about that.
All right, Paul, I want to get your thoughts on the semis more broadly, because the SMH has just been on a tear as of late. We know that tends to be an economic indicator so far, and particularly now with Intel, some questions about what's being indicated.
No, I mean, I think Intel is a story unto itself. It's a turnaround story. There's going to be a lot of noise in that company, and in the short term and longer term, a year from now, it's not going to matter what happened this quarter for Intel. It's going to matter how their turnaround story is going. Semis overall, though, we've seen massive outperformance on the part of the semis, relative in not only price but relative strength, hitting new highs, and that's a good omen for the broader market and the economy, and that's what we've seen. Back when the Fed pivoted in December, we moved to an environment where good news is good again. Now we only needed economic data to live up to its end of the bargain, and we've really seen that, especially this year. Just recent reports like retail sales, GDP, inflation data coming in lower than expected. We're in a point now where the GDP growth is, on a real basis, is higher than the rate of inflation. So that's a really positive environment, I think, for the stock market going forward, even if we are overbought in the short term here.
And Paul, I want to get your take, too, on just how the market is likely to react, given the strong overall economic data that we've been seeing. T-Mobile, a little weaker on the net adds than analysts were hoping to see. Also on EPS, the consumer overall seems to be doing fine. So how does that get digested by investors in this environment?
So I think it gets digested in what we've seen in the market so far this year. We've seen that, we've seen strength following up from the strength we saw in the fourth quarter. So that's a good sign for the overall market. I know we haven't seen the broadening of the rally that we expected to see. It's taken a real stumble so far this year. But these mega cap stocks can't keep going up forever while the rest of the market stalls out. And if AI is going to be the big productivity enhancer that it's billed to be, it's not only going to impact the Mag 7X Tesla, it's going to benefit all the other companies, corporate America too. And you just look at the top 6 market cap companies, their combined market cap is over 12 trillion. The 200-day moving average of that market cap is 10 trillion. So it's 2 trillion above its 200-day moving average. It was only a couple of years ago we were looking for a stock to hit $1 trillion market cap, and now we have this massive rally that we've seen in the short term. And just to put that in perspective, that 2 trillion is the equivalent of 2/3 of the entire Russell 2000. So I think even if you saw a little bit of rotation out of these mega caps, it would really spark a light under the smaller cap areas of the market.